If I asked you what PMI stands for, most of you would probably say private mortgage insurance, but most first time buyers think it stands for, check it out, please move into my parents' basement because I'm never going to save 20% down. People hate PMI. Dave Ramsey hates PMI. Your parents probably told you don't buy a house until you could put 20% down, or you're just throwing money away. And because of that advice, millions of millennials and Gen Zers are stuck renting, paying 100% interest to who? A landlord, waiting for a magical savings account that never fills up fast enough. I want to know who told you to wait. Was it a parent, a financial guru, or just the internet? Drop a comment below saying parents or internet. Let's see who the biggest culprit is. Welcome to day 7 of our 12 Days of Housing Challenge. I'm Cathy Sabater, and today I'm going to be the defense attorney for the PMI. I'm going to show you why PMI isn't a waste. It is actually a cheap, fast path to building wealth. First, what is it? Yes, it stands for private mortgage insurance. And who does it protect? It protects the lender in case you stop paying. It doesn't protect you. That sounds bad, right? Why should you pay for their protection? Think of it differently. Think of buying a home like getting an exclusive VIP club called home ownership. Inside this club, home values go up and you get tax breaks and you build equity. You have two ways to get in. Da-da-da-da-da, drum roll, please. The VIP entrance, you pay a massive coverage charge of about $100,000, which is about 20% down on a $500,000 home. Or the side entrance, where you pay a small monthly fee, PMI, private mortgage insurance, to get in now. With just, let's say, 17,500, that's 3.5% down versus 20%. PMI isn't a penalty, it's the cost of access. It allows you to enter the club 5, 7, or 10 years earlier than you could if you had to save that massive lump. So, quick math check. How long do you think it would take to save $100,000 of cash right now? 2 years? 10 years? Never? Type your estimate in the comments and be honest. Okay, let's do scenario B. Wait to save. Let's look at the numbers because numbers don't lie. Imagine a $400,000 home, the renter who waits. You decide to wait 5 years to save that full 20%, $80,000, so you can avoid PMI. Congratulations on saving that money. But in those 5 years, home prices rise conservatively, and we're going to use 4% a year. Okay, so that $400,000 house is now worth what? $486,000. You saved $80,000, but the price went up by $86,000. You literally went backwards. You are further away from 20% down than when you started. Now, the buyer who pays PMI. Now, let's say you bought a house and at that house today, you decided to put maybe 5% down, right? Your PMI, private mortgage insurance, will cost you about $150 a month. Rough estimate. However, your house grew in value by $86,000. Would you pay $9,000 to make $86,000 every single day of the week? That's a 900% return on your investment. The waste isn't the PMI. The waste is in the appreciation you miss while you are saving. Now, does that math blow your mind just a little bit? Type my mind blow if you never thought about appreciation versus savings. Here's another myth. PMI is expensive. People act like it's $500 a month. In 2025, if you had a decent credit score, let's say 720, your PMI, private mortgage insurance, is shockingly cheap. On a $400,000 loan, it might be $80 to $120 a month. That is the cost of, let me think, two DoorDash orders maybe? One nice dinner out? Huh? Do you have that daily Starbucks habit? Are you really going to let the price of a daily latte keep you from building hundreds of thousands of dollars in net worth? What is a silly subscription you may pay for right now that costs $20 or $30 a month? Netflix, gym membership. Do you use it? Confess. Confess your subscription sins below. Here is the best part. PMI is not a life sentence. It is temporary. Once you have 20% of equity in your home, you can request to have it removed. That's mostly for what type of loan? Conventional loan. FHA loan, we'll talk about that in another video. You can get to 20% equity by what? You can pay down your loan, slow way. Appreciation is the fastest way. If your home value goes up, your equity goes up. I have clients who have bought with as low as 5% down, and 2 years later, the market went up. We call the servicer, order a new appraisal, show them the new value, and poof, the PMI was gone. They didn't pay for it for 30 years. They only paid for it in 24 months in this particular scenario. So stop demonizing the PMI. It is a tool. It's a ladder that helps you climb up the wall for what? The wall of home ownership. Your day 7 challenge. I want you to find out exactly what PMI would cost you. Not your friend, not what Google says, but you. PMI, private mortgage insurance, is based on your credit score and your down payment. Comment PMI below, and I'll send you my rent versus own calculator. It includes a PMI estimator so you can see the real math. If it's only $75 a month, wouldn't you want to know that? I'm Cathy Sabater. Stop waiting for perfect. Start building wealth. See you tomorrow for day 8.